What's up, guys? It's Friday, September 22nd, 2023. We're going to do a breakdown of the E-mini. We're going to start with yesterday's price action, the market cycle, the first 6 bars, where the buyers and sellers are, and the patterns we had today. Yesterday's price action was a downtrend. We started out in a range. It's a downward range. It's a tough range, but since bulls are making money, it does count as a range. These are just so you guys can see the range. I'm not trying to project no lines here. So bulls are making money, so this counts as a range. Buy low, sell high. But it has more downward pressure for the gap down. And you see at the end of the day, they ended up breaking out. And this was a pretty strong sell from when the breakdown started. This was a very strong sell. Something I wanted to bring up was the previous day's price action too, because this ties into the market cycle. We've been doing the market cycle in a 1 hour time frame, but there's different types of parts to the market cycle. For example, this started out as a tight bear channel. A tight bear trend. You see how bulls are hardly making any money? We're going to extend this down to here because technically this is a bear bar with continuation. So from the cycle in terms of trending range, ranging trend, trending range, from that aspect of the market cycle, it's a tight breakout over the range, because remember where we're at, where we were in this range. We were in this range when that sell started. So we have a tight breakout of the range. And then we have another sell, but it's broad. Bulls start to make money in this sell. They don't make a lot of money, but they do make money. Here, bulls, this is a pullback. Maybe they make money on the pullback. They got 2 legs. And then after the breakout, they don't make money. They make money here very fast too. It was 3 bars. And they make money here for 4 bars. And now look here. The bulls actually do make money today. And then it sells. And then they make money. And then it sells again. So for this type of market cycle, it's a trend into a channel, and now it's going into a broad bear channel. And then eventually, whenever that does happen, we flatten out, and then the market decides, do we go lower or do we go higher, or do we just stay where we're at? So from this perspective, let me see if I can change the color here. So from this perspective, how we had a tight channel, and then we had that looks weird. I should just not do that. I was trying to make a box. I deleted it, great. So from the tight channel, it goes broad, and then like that, and then it breaks out, And that's what we see here. It's tight, and then they start making a little bit of money. Another channel, no money, and then today they made money. Maybe the markets deem this a good price and we range, and bulls make money next week. We just range. Or maybe they're like, no, we're going lower. You guys are not making money. Or maybe the bulls are like, hey, you guys have made too much money. We're going up. Look at this price action. So that's where we're at within yesterday's context. Today was a broad bear channel. It's still a bear channel. There's still a downwards momentum. I'm over here just deleting and clicking. Here we go. There's still more downward momentum, but bulls are making a little bit more money today. They made a little bit more money than yesterday, and they didn't make any money the day before. So you see how the market is kind of transitioning. It transitions from expansion to contraction, trend to range. In range-bound environments, both sides make money. In trending environments, only one side makes money. That's why the markets don't trend that often, because the job of the markets is not for us to make money, but to find participants. So for it to find participants, it needs to be ranging, so both sides are looking constantly. Okay, we're going into the market cycle from the 1 hour time frame. I don't want to keep going off on little tangents here and there. Market cycle, 1 hour time frame. We projected this line from here to here, and it gave us this support level and this breakout. This is a overall zone. It looks like where sellers were sitting from this gap down. You guys all see that. I don't want to keep repeating myself on what we know already. So this is the sell. We had Let me delete this red line here. We had one leg, two leg, and this is climactic. That's the biggest leg between yesterday and the gap down. That's a big leg. Out of all the legs, let's see if we can measure this real quick. I want to get more technical. So the first leg down was 58 points. There's a little bull bar here, but I'm going to count that. I'm just going to pull that as a second leg. 45 points. Third leg down. Let me make sure this is big enough for you guys to see these points. That should be good, right? Yeah. So first leg's 58 points. Third leg is 45 points. Now look at this leg. I'm gonna pull it from here, I think. I think that's where I want to pull it from. It goes down 110 points before they get a pullback. So the trend is getting stronger. Rare cases, the market just plummets, but I've never been around for a crash. I don't know anything about that. I don't want to think about I don't want to put my mind in how do I word this? The market crashing is a very small probability event. So I don't want to prepare myself for that when in reality, if the trend is getting bigger, it could be coming to an end, a pause. You guys catch my drift. I'm trying to keep my bias from, because I like shorting, but the trend is getting bigger and bulls are making money now. Let me make these candles green. Actually, you know what? We measured that, so we're going to measure these two. We are going to get better at analysis. Bulls make money from here today. They make a 20, 21, 25 point swing up. I'm kind of counting wicks because we're on the 1 hour chart, so that really is like a high, I guess. I should do it here. Make it make more sense. All the leg measured 50, 56, 50, 115. And then make money here. So both legs are about 20, 25 points for the bulls today. Yesterday's leg before the pullback was 32 points. And then it has been blood for the bulls. They have not been making money. So just from point counting like this, we can see who's in charge. But we can also see how the bulls are starting to make money. So that doesn't mean I'm buying the dip on Monday. That just means, okay, the trend got bigger, and now bulls are making money at lows. What type of environment do bulls make money at lows? I think it's a range or a pullback. So there's always there's always two possibilities. Either three, either we range, we break out, we break down. And then these have two possibilities. Either this passes and we go, or it fails and we go down. We range and break out, or we range and sell off. We range, or we sell off and pass, or we sell off and fail. And then these two have two things. Either the buy continues or the buy fails. I can't even remember. You see how this is how it extends. Okay, maybe the failed breakout becomes a uptrend. Maybe they need to dip before they go higher. So you can see how this can get pretty complicated. And this is why I don't like to predict it, because you can't predict this. Maybe someone can. I can't. I'm also new at trading, but by doing that, I can keep my mind open to how many real possibilities there are. But for the moment, we either range, break up, or break down. Break up. Yeah, we're breaking up. No, I meant we have an uptrend, but we are far away from the EMA. They are gapping. There is bear strength. I don't want to make it that's a lot of bear strength, So, heck, I think the gap would be here. So if that's a gap, that's a lot of bear strength. The bulls got work to do if we're in a range. So that's enough of that. The first 6 bars of the day. It's back and forth trading. It's a limit order market. I broke my rule and I traded today and I lost money. So I should have just stayed out the first 6 bars and I would have been good. But hey, that's what this is about. It's about learning. So this is the limit order market. Buy low, sell high. What can we expect for the rest of the day? Well, this is a tight enough range to get a breakout measured move, I would assume. It'd be pretty tough to stay in this. My measured moves, I gotta fix my fib levels. Let me do it like that. So yeah, a breakout would be right up to here. And same thing for a breakdown, you know. So either way, like we were gonna get like a little bit of a move. Whether it fails after that, I don't know. But also, I don't want this to mean you're gonna buy this close here. What I'm saying, this doesn't mean buy the close. This doesn't mean sell the close. It means wait for confirmation. Wait for that second candle to be put in. Wait for that second candle to be put in. Look, we had 3 bear bars here, and then it's alternating. So just wait. I get chopped up here. I'm sure a lot of new traders would get chopped up here. But there is good money to be made if you can limit order scalp. Scalp 2 points, scalp 2 points, scalp 2 points, scalp 2 points. So the first 6 bars of the day is a limit order market, and it's range. It's ranging. That's the definition of a limit order market. It's a range bound market. And then let's play the next 6 bars out. That's the next 6 bars. Actually, let's play like a couple more, because I think that turns into, yeah, that's what I remember that bar. So look here, look. If you bought this, if you bought that close, bar 4 close, do you put your stop here, or here, or here? I would put my stop here. I would also trying not to buy that in case this is a bear flag, like that, or a bull flag. We don't know. It ended up being a bull flag, but at this moment in time, it's a bear flag. So if you bought this, what would you do? You don't know. You put your stop here. Maybe you get stopped out. Maybe you're lucky you don't get stopped out. Maybe you buy more. But then here we see the follow through. And this isn't the best follow through because this is a pretty big wick for a breakout. With this type of bar for a good follow through, you would want to see something like this. You know, look, like that wick came up to the 50% level and sold. This wick had to dip low for buyers and move back up. So it's not the strongest breakout, but it is a breakout. 3 bars, bull pressure is picking up. Bear trap into the EMA. Be careful here. Wait for 2 bars. If you wait for 2 bars, you never get that second bar. You're safe. Now we have a setup here. That's a good swing long. And yeah, bulls get 2 legs. I remember counting that one. I think they sell. Yeah. I think this did fail. So bulls make the 20 mark. They get 3 pushes up. 1, 2, 3. And they reject. So that's the first 6 bars. It was a limit order market, and I think this really hurt the the bull trend. Like, bulls do not want to see this, especially after this. Maybe you could say we're going to a 50% pullback, but if for a strong bull trend, I don't think they want to see any of those bear bars. It's the first 6 bars of the day. And we're going to talk about the buyers versus sellers and the patterns. Get a sip of the coffee. It's pretty nice. Okay, so we got the first 6 bars. We know where the buyers and sellers are at the first 6 bars. Buyers, sellers. Market dumps and traps bears, and I think that helps the bull pressure. Well, I don't think it does help the bull pressure, but at the time, we don't know if we're looking at a bear flag like this, or are we looking at a bull trend. This confirms it could be a bear flag, could go like that, but right now, bulls are starting to pick up strength. They're starting to buy strong bars. bears are not making new lows, and they're not closing a lot of bars below the EMA. This closed strong above the EMA. Then we get another strong bar above the EMA. So we have bullish price action, and buyers. Bulls are buying lows. They're not too inclined to buy highs. You can see the best moves came off the EMA rather than continuation. Whereas, like, someone could say, like, this flag never made it back. Even though sellers are here, but there's a gap. Here, we touched it. We touched it. So it's not as strong. And then bears put in a nice reversal bar, and they push down below the EMA. And this is the first time bears put bars below the EMA. Strong bars. Bulls get 2 legs, and I thought this was really cool. I was able to count the legs. 1, 2. People will expect a 2-legged pullback, whether that comes in 10 bars, 5 bars. They're going to expect some sort of 2-legged pullback. And we got that. 1, 2, 3, 4, 5, 6, 7, 8. About 8 bars, 2 legs. This bear bar signifies the pullback for the bulls. So 1, pullback, 2. And it sells. It sells to new lows. So we're still in a broad, this is a broad bear channel. We are in a broad bear channel right there. Right here. So we sell off into channel lows. We have a small pullback, and this is the first bull bar after heavy selling, maybe like an hour and a half. That's not the right. What, 10 o'clock, 9:55. A little under an hour of steady selling. So the first bar, bears are going to see that as an opportunity to short. The first bull bar, bears will see that as an opportunity to short. Yeah, so that's exactly what they did. And if you didn't want to short without confirmation, even this doji was like a pretty nice short. With all this and then that's nice to me. I got short here. This was the trade that I passed the funded account on. That video will be up later. Your boy's funded again, 150K. Bit nervous. This is my biggest account. It was really good price action, but this was the trade that I passed it on. Anyways, so this is a good pullback. First reversal fails, and they sell off. They get leg 1, leg 2. Maybe we see this as a failed leg 3 in the making, because we would expect 1, 2, 3. But this was nuts. I didn't trade any of this. So bulls put in a double bottom a little bit below yesterday's low, and it rips. Bears get trapped, are forced to buy back shorts. Bull flag 1 rips. They make a quick 10 points. Another quick 10 points. That's like 25 points in 5, 15, 30. In like 45 minutes, they made 25 points. That is just unsustainable. Here, we get the same setup. Look at that. 3 pushes up, failed breakout. That's a wedge top. Wedge top, bull flag, 3 pushes up. Where does this test? I'm going to delete these lines. You guys can see the channel. It tests the breakout point. We come up, test the breakout point from earlier. And bears, I think this would be the 3rd leg down. Let's do it from the breakout point that the market tells us. So you wouldn't catch the full leg. Let's see it like this then. From here to here to here. You would pretty much, so that would be the leg 2 measurement if you're trying to try and put in some structure. A simple way, what you could do too is, once you get short, is just target previous lows. We did make new lows, and this is pretty rare in the day to make a new low. Oh wait, is this after hours? Oh, that happened in the last 10 minutes, so you've got some nads if you held past like the last 10 minutes, you know. That's good on you if you held that to a new low. That was the day, man. That was the day. Bulls made money, bears made money, and then bulls made money, and then bears made money. Bears are still stronger. The bear moves are paying more than the bull flags. We had crappy bull flag here, bull flag here, bull flag here that turned into a wedge bottom bull flag. Wedge bottom bull flag. Hold on. And then the last bull flag failed. Here's a nice bear flag. That's just nice as hell to me. A pull, textbook two-legged pullback into a sell. I mean, I already know this is 10 points, so they get their 10 points. They get 30 points. 10, 20, 30. I love it. Point counting is helping me out a lot. It is tough to stay on the strategy, but it is working. It is working. I'm gonna be studying sim trading all weekend. So you guys gotta be sim trading too. Don't have fun this weekend. Only sim trade. Study. Use your stop loss. Don't have fun till you're profitable. Have a good weekend, everybody. Bye.